How's it going, everyone? My name is Amos, and earlier this week, I investigated and researched the buy now, pay later sector, which, by the way, seems to be all the rage on Wall Street. Everyone seems to be pretty darn bullish, and I think the one that has the most potential is the company that we are going to analyze today. And based on y'all's feedback, you seem to be interested in it as well. So in this video, we're going to be doing a deep dive into Sezzle. And through that process, we're going to be calculating an inherent worth for their stock price based on their numbers and fundamentals. And towards the end of the video, I'll be going over my game plan, but more importantly, we'll be placing Sezzle somewhere on the compounder chart. But before we go anywhere, can we just talk about what exactly happened on Friday? My goodness gracious. Well, I feel like during this current administration, whenever there's a long weekend coming up, especially when the stock market is closed, I feel like big money, they sell and hold on to cash because they don't know what's going to happen over the weekend. And the word that we all hate to hear is tariffs. And I think on Thursday night or Friday morning, I think more tariffs were announced. And in particular, I think the US, they're trying to restrict the exportation of NVIDIA and AMD chips. So the entire stock market went on a sell-off. And as you can see on your screen right now, when we look at the fear and greed index, because I think psychologically, it's a lot of emotions that cause big swings, volatility from the day-to-day movement. Obviously, there are some macro environmental conditions that cause a long-term trend. But the previous day on Thursday, it was 49 out of 100. It was pretty neutral. There was a healthy amount of buys and sells in the stock market. Today, friends and family, we were operating at a 29. That's absolutely fearful. And that's why everybody was selling. There were more people selling stocks than buying stocks. Me personally, I only buy on red days. So I bought quite a handful of stocks, but this video is about Sezzle. So let's go ahead and talk about what exactly is Sezzle and how do they make money. And by the way, go and watch the overview of the buy now, pay later sector video that I just uploaded so you can get caught up to speed. I'm gonna assume you already watched it. So the bottom line up front is that Sezzle is a buy now, pay later fintech company that was founded in 2016. And they actually went public on the Austrian stock market first. And then they delisted themselves and came over to the US stock market on the NASDAQ in 2023. And as of right now, they're absolutely disrupting the credit card industry. Essentially, BNPL providers, they give small loans to their customers so that they can purchase their new iPhone from Apple or to buy a Chipotle burrito for like $9 or $11. And what makes Sezzle different from the competition, such as Affirm, Klarna, dude, there's so many different BNPL players. But when it comes to Sezzle specifically, what makes them different is their target customer base is Gen Z. So people that are like 21, 22. And people that have a below average credit score. Because when you think about it, the market trends and the younger demographic, they're not really interested in credit cards. I don't think they care that you can rack up points that you can utilize to book a hotel or a flight for free. They really don't care. So what makes all of this interesting is that Sezzle is playing into this trend by not playing and working with the credit rating agencies or the credit cards. They leave them out of the equation. And what's really funny is Sezzle's painting themselves as the good guys. We're not the credit card companies that are going after you. Instead, we're giving you these small loans so that you can purchase something right now up front. Yeah, it really depends on which spectrum you're looking at it from. But anyways, when we think about how exactly the Sezzle make money, they make a majority of their revenue by charging merchant fees, such as let's go ahead and assume that someone uses Sezzle during the Amazon checkout process and their cart or basket is like $100. Amazon will see the entire $100 as their revenue. And Sezzle, well, whatever the merchant fee is, I think it's usually like a 3.5 or 4%. So in Sezzle's case, they'll get $4 in merchant fees as their revenue out of that entire $100 that the consumer just spent. However, it's also worth noting that Sezzle makes a small portion of their revenue from late payment fees, such as like if you're supposed to pay it all back by next month, but you're kind of late, then yeah, they do charge you a late fee. But do keep in mind that's only a very small portion of their revenue, which I would argue is the complete opposite of credit card companies because they make the bulk of their revenue from the credit card balances that are carried over month. So what you see on your screen right now is Sezzle's website. And I want to just show you what brands they partner with. So you can go to like Amazon.com and you can pay with Sezzle instead of using your Visa, credit card, or MasterCard, or even American Express. Instead, it's going to be directly linked to your checking account or your bank account. And according to Sezzle, these are the brands that are resonating most with their customer base, like Airbnb, the Carnival Cruise Lines, Uber Rides or Uber Eats, Target, Shein, eBay, Lyft, Hotels.com. But I want to show you how big their network is already. If we go on over to the shop tab and I don't know, let's go ahead and click on pets. Just look at how many different vendors they're partnering with. You got PetSmart, Chewy, Petco, Kitty Spout. The list goes on and on. This is a company that's slowly putting their services into almost every crevice of the capital society that we live in. And something that's important to know is that because Sezzle does not care about a customer's credit score, they use an AI underwriting strategy like insurance companies to approve or deny customers based on their own data. So on the spot, based on who you are, if you just need to use Sezzle to buy a Little Caesars pizza, they could say no. They're not going to just approve everyone. I think it's somewhere around like the 71, 72% approval rate. And now let's go ahead and talk about the recent developments that's surrounding Sezzle. By the way, the weather in Japan is phenomenal these days. It's cloudy, it's gray in the skies. I love it. I'm in a entirely better mood because of the weather. But anyways, their latest earnings happened back in August. If you're not in the know, an earnings is basically a snapshot of a company's financial performance for the past 90 days or 3 months. Like, did things go well? What are the pending speed bumps? What are the call outs, the highlights, etc. And they beat on the top and bottom line expectations. And what that phrase means is they basically tell Wall Street like, hey, we might be able to generate $50 million in the next 90 days. And then during their earnings report, they circle back to that promise and tell them whether or not we beat or we underperformed that 50 million mark. Now, in the case of Sezzle, they smashed. Their revenue was up 76% year over year, but it wasn't all rainbows and sunshines because they did call out that the macro environmental conditions could impact their customer base. And according to the latest research from PwC, which is one of the big professional consulting firms, they're predicting that Gen Z will spend 23% less versus last year for this upcoming holiday season. So for this next earnings report, I guess we'll see how it exactly pans out. Now, at this point in the video, we're going to be calculating an inherent worth for Sezzle based on their own numbers and financials. Not bias, not emotion, not speculation, based on their own numbers. And I think this is really important because, remember, Sezzle was founded in 2016 and they were actually operating as an unprofitable company up until 2023, which means they were losing more money in order to make money. But since 2023, they've been in the green. And I promise you, during the second half of the video, we're going to be taking a closer look at their numbers. However, do keep in mind right now, their PE ratio is a 26.3. Their forward trading multiple based on next year's forecasted EPS, a 21.3. Just keep that in mind. Now for this year, which we only have about 2.5 months left until 2025 is a wrap, between you and me, absolutely crazy how fast time is flying. But the high forecast for their earnings per share, which is essentially the bottom line per share, in other words, the profits per share, $3.47. Now, the low estimation, the bear analyst that's covering Sezzle says $3.19. However, straight from the words of Sezzle's leadership team, their guidance for this year, they're anticipating an EPS of $3.25. So I'm going to go ahead and assume that Sezzle is going to finish out the year with $3.25 as their profits. Now, if they continue to trade at a valuation of a 26 PE, that means they'll conclude this year in the next 10 weeks at $84.50. However, it is worth noting that since 2023, their average PE historically has been a 29. So if the narrative and the sentiment surrounding this company goes back up to a 29, I know it's not the biggest upside from a 26 PE to a 29, but if that does happen, then they could potentially hit $94. Right now, they're $77, so it's not the greatest upside to either case. The realistic case versus the bullish case, not the biggest upside, but if we continue to play this game And Sezzle continues to pull off immaculate numbers. And next year, they're able to increase their bottom line per share by 35%. And they continue to trade at a PE ratio of a 26, which, by the way, that's not too high. That's not too outrageous because the average PE ratio of the S&P 500 is a 31.9. So Sezzle at a 26, I think it's not too bad. Then, by the end of next year, hypothetically, Sezzle could be $114. Now, the upside from 77 to 114 sounds a lot better to me. Now, if you fast forward to 2028, going from $77 to the best case scenario, $179, not bad at all. But I do want to show you something that just makes all of this kind of crazy. Because if we take a look at Sezzle's stock price history and we max it out, dude, they were listed on the stock market back in August of 2023, roughly $13.51. Went on an immediate sell-off down to like $2. They were $1.73. They were essentially a penny stock towards the end of 2023. But since then, they just went on an uproar, right? A 472% total return in the span of 2.5 to 3 years. I would argue that's pretty delicious. That's really good performance. But it does seem like they have natural peaks and valleys, which is kind of weird because their history is not that long, but to see that is kind of unsettling. So their most recent high, it was really recent, right? July 3rd, $182 a share. Friends and family, that's a matter of 3.5 to 4 months ago. Now they're $77. If we zoom back and we only look at the past 1 month, we're talking about negative 12% if we round up. If we do 6 months and I capture that high, then we're talking about negative 57.3%. They lost $104 in their valuation since the 4th of July weekend. That is pretty crazy. So I guess the question that immediately comes to my brain is, will this trend continue of them going lower and lower? I guess only time will tell, right? Now at this point in the video, we're gonna be placing Sezzle somewhere on the compounder chart up against all of the other companies that we covered on this channel for the past 4.5 to 5 months, which if you want, you can pause this video, look up any one of them, and you'll find it on my YouTube channel. But before I do so, here are some of the thoughts that I'm working with. So globally, Sezzle has about 748,000 monthly users. That's quite a lot. And what makes that even more impressive is that it's growing by the day. Because last year, at the same time period, they had about 462,000 monthly users. So it's growing at a very aggressive pace. And that's why we're going to be looking at their numbers really soon. It makes sense as to why their revenue, their net income, and everything is just exploding in growth. And something else about Sezzle that sets them apart from the other BNPL providers is that Sezzle gives their customers the option to report their mini loans to the credit rating bureaus. That way they can build up their credit score. Because I think one of the appeals of using a BNPL is that there's no credit process involved. But now they're helping their customers to build credit. And I think that's a value add because a lot of Sezzle's customers, they don't have access to decent credit cards like the Amex Platinum card or the American Express Gold card or the Chase Sapphire series or the Capital One Venture series. Like to do that, you need to have a sufficient credit history and your score needs to be good. But if you're like a college student, if you're a early professional that's like 23, 24, your credit score is probably like what? 620, 630, 640 because you're building it up. And after spending the past like 29 hours just looking into this company, reading everything that I could about them, I like their operations. But I'm gonna say this, I feel uncomfortable in that they do not have an economic mode. And from my understanding of the finance space, it's absolutely cutthroat. They have a lot of competitors that are doing the exact same thing that they're doing. There's competition on all ends. And something else is, it kind of feels like a throwback to 2007, 2008, 09, when Wall Street was approving everybody left and right for a mortgage, which we all know how that ended, right? In the great financial recession. With that loan approval process, they were just handing it out like candy, right? Even on my own street that I grew up on, I would argue like 4 out of the 10 homes near us, it foreclosed because of that mortgage crisis. And that's kind of like how I feel about the BNPL sector. It kind of feels like the new lending scheme that's going around regulation for the time being. Like they're able to just give people immediate access to loans in order to buy, a Domino's pizza, in order to buy your new outfit from Lululemon, and etc. However, I think the question that's burning in the back of my tiny little head is, what happens when the majority of their customers buy now, but they pay never? Because when you think about it fundamentally, we're talking about loans at the end of the day to a customer base that have very low credit scores. So even though on one hand, I'm really attracted by their financials and fundamentals, I'm also, on the other hand, grounded in reality and thinking like, but dude, they're kind of catering towards a segment of customers that aren't really doing too hot. But then again, it kind of reminds me of how I used to be an investor of Discover before they were acquired by Capital One. That was in a way kind of the similar game plan that Discover had. They were targeting customers that were just building their credit scores, but their financials and fundamentals were pretty good. And there was always that narrative about like, well, if you're catering towards the society's lowest credit score people, then aren't they all just going to be delinquent on their credit? But the thing is, that's very extreme thinking, because as a shareholder of Discover for like 5 years, they were always good. They were always in the clear. But I also think the success of Discover is because they were partnering and utilizing the credit rating bureaus. Whereas when we talk about the BNPL players, they're keeping them out of the picture entirely because they want to keep all of the profits. So I don't know, thinking about all of the factors, this might be a very unpopular opinion. By the way, based on one of y'all's feedback, thank you so much. I take all feedback with an open heart. Unless you just tell me I'm ugly or I'm stupid, then I just ignore you. But now it's a little more systematic and organized. If it's all the way to the left, obviously I'm the most bullish about that company, and it's a certified compounder for sure. Anybody in this circle is a certified compounder. And if we go to the other side of the pool, the kiddie section where everyone's urinating, then it's essentially the Kager graveyard. All the way to the right is essentially meaning, it lines up right there, F tier. If you think about the US grading system, it goes from an A down to an F, right? F being absolutely disgusting, hideous, and hairy, and A is excellent. Now, if you're elevated to that S tier, that means you're the best of the best. That's how highly I think of Google. I am not a shareholder of Google. And anything in the middle is categorized as the watch list, wait list. It can go either way. They can be a C+, they can be a C-. When we think about Sezzle, where do they go? Believe me when I say it was hard for me to do this, but I think based on all of the factors and considerations, they're going to be on the watch list, wait list, in the exact same position as Lululemon and PayPal. I think if we really are headed towards an economy where people are going to be pulling back their spending, then I think Sezzle is going to be impacted in a negative way. By the way, it's getting dark really fast. It's crazy. However, as a man of my word, I want to show you their numbers. Let's see what Sezzle is working with. So their market capitalization right now is $2.6 billion. They're not the biggest company in the world, but they're far from being a micro cap. I just want to show you this. Their revenue growth year over year, the percentage change is just magnificent. Now, to be honest with you, if we were to blur it out and it didn't say Sezzle, but instead we were seeing these numbers copy and paste it onto, Amazon, Salesforce, or Adobe, dude, your nipples would be absolutely perky and sweaty. You'd be like, dude, I'm so bullish. But because it's on a company that's handing out micro and mini loans to customers that have really bad credit scores, it does put it into context, right? So even though they are executing excellent numbers, it is also concerning on the other side. As I alluded to earlier, they used to be unprofitable, but ever since 2023, it's a good picture. And the growth rate of their earnings per share year over year, the percentage change is pretty crazy. It's pretty wild. And if we jump on over to their balance sheet, take a look at their cash situation. For a fintech company, they have about $88 million of cash and cash equivalents on hand. Not too bad. We want to take a look at their debt. Their total debt is $131 million, which means if you take all the cash on hand and you pay off all of the debt, how much do you have left over? You still have $42 million of debt. That's not too bad, given the scale of their revenue, $371 million. I think that's a manageable level of debt, especially for a startup that doesn't really have overhead costs. They're not manufacturing shoes or toys. They're very asset light. They don't have CapEx. Talk about their free cash flow situation. It should be pretty good, right? $28.7 million. It's kind of inconsistent. Sometimes it's up, sometimes it's down. Not the greatest thing in the world, but at least it's in the green, and they're profitable, and their revenue is growing at a pretty aggressive pace. So here's where my brain is at. I could absolutely be wrong, okay? This is not universal truth. You have to do your own research as well. But I'm thinking, if I had to guess, when we think about Sezzle, I think worst case scenario, they're going to get bought out and acquired by a legacy company that wants to enter and be a bigger player in the BNPL space. I'm talking about like Capital One or even JP Morgan Chase. I think one of these legacy players are kind of missing out on this momentum and movement and growth. But I do think Chase does have their own variety and flavor of BNPL, but it's not as popular. So that's the worst case scenario. I can absolutely see them being bought out. Because when you think about it, past 5 years, that's an outrageous total return. Wait, why is this higher than the Google number? I think Google said 400% to some change. I'm going to go ahead and use finance charts as a tiebreaker to see what their actual total return is since they've been publicly traded in the US, 472% the past 2.5 years. So that's the more accurate number. But 5xing your initial investment in 2.5 to 3 years, how could you argue with that? I think I would be pretty darn happy, especially if you bought into Sezzle when they were $1.73 back in October of 2023. Now, on the other side of that argument, I think in a best case scenario, now this is with a very cloudy lens and thinking about stuff with a very overly optimistic way, which I don't really like to do when it comes to evaluating and analyzing companies. I like to stay pessimistic when it comes to evaluating companies, but in real life, I'm full of joy. I'm a happy dude, always smiling and joking. But with companies, I try to err on the side of caution and be safe. Best case scenario, BNPL becomes the new standard and the way to shop for the younger folks as they get older. When we think about the older generation, as they get phased out, I don't know if that's a proper way to say after they pass away, these youngins that are 21, 22, 23, they'll eventually become 40. 50, 60 years old, they'll be homeowners, they'll have a reputable salary, and their credit scores will be better. And I'm thinking if that is the new future, and they all adopt that way of buying and purchasing things, and that becomes the standardized way while still disliking the credit card space, then this is early for them. $77 right now, they could be the next, hypothetically, the next MasterCard, right? In a delusional world where everything pans out for BNPL, they could balloon up to a $500 billion market cap, trade for $500 a share. Now, do I see that happening? I don't know. I want to say I don't see it happening, but you never know, right? You never know. It could happen. So when it comes to Sezzle, I really like their numbers. I really do. When you look at this, that is simply impressive, especially considering they're profitable and they're increasing their profits per share at a ridiculous rate. But with that said, for me personally, I'm not trying to tell anyone else what to do. I'm talking about me and my own logic. I would rather go with Block or PayPal because they also offer BNPL in their portfolio, but they're also diversified in their product offerings as a fintech company. It's not their only menu entree item. Does that make sense? For Sezzle, all of their eggs are into that BNPL basket. If this industry gets heavily regulated or disappears, or they have to, by law, start reporting their customers' credit scores to the credit rating bureaus, and it causes a whole debacle, it can come crashing down and burning everywhere. But with PayPal and Block, they also do a whole bunch of other stuff. So by buying into PayPal, you also get exposure to the BNPL space, but you also get the upside of the other offerings that PayPal is trying to execute right now. So, however, I do want to be honest with you. I think given the right price, I am going to buy Sezzle. As a matter of fact, as of Thursday and Friday, I've been trying to buy into them, but they never reached my exact price target. I mean, they got close to it based on my technical analysis, but I was off target by like 2 or 3 cents for both days, so I wasn't able to get it. I don't really see Sezzle as a buy and hold forever. Rather, I kind of see Sezzle as a opportunity because the markets, they do have their days where the market just really loves them and they're feeling very bullish about them. And their fundamentals and financials look good, so I understand. So if I can buy them at a low price and then sell them when they have their next rally or pop, I'd be a pretty happy camper. So what do you think about Sezzle? Do you love them? Do you hate them? Do you feel bullish, bearish towards the BNPL sector? Let me know. And before I sign out of here to help my wife clean the house before the baby arrives, I want to give a shout out to Brandon for helping out with the Amazon baby registry. I really appreciate you helping out. And I'm glad to hear that you got in early with Amazon. He bought Amazon in 1998. And Brandon bought Amazon for roughly 35 cents a share. And since that time, it's gone up by 61,720%. That is pretty crazy. And that's why that's the fundamental difference between something like Sezzle, where I would buy and sell on the rally, and a high quality dividend compounder with cheese. Something that's going to compound your initial investment 3, 5, or in this case, 61,000 in a manner of 27 years. To buy and hold a high quality compounder, it's a no-brainer for me. So like Google, Amazon, love it. But for Sezzle, I don't know if it's a buy and hold. So that concludes my thoughts. And with that said, I love you guys. I'll talk to you really soon. Stay safe. Good luck in the stock market. Peace.